Welcome back. I'm Andrew, your crypto guy on the internet. And things are rough, but we can come up with a plan here real quick. The important bit now is we want a DCA, but we don't want to buy every dip. The phrase buy the dip is easy to fit into a comment or a bumper sticker, but realistically just blindly buying any dip makes you broke real fast and you run out of cash to play with. And then when the real bottom shows up, you have no money left to buy it. So I have never really been clear on when I like to DCA. I've kind of said a few numbers, but my DCAs are generally really small, except for specific targets that I'm going to tell you right now. So people are constantly asking me, where's the bottom with Bitcoin? And there are multiple possible bottoms, all depending on how the story goes. And that's where I have hefty DCAs. I have buys at all of these possible bottoms. So where we are right now is 33,500. Now in previous videos, I said, hey, our short-term bottom is looking like 33, 34, maybe lower to 30, right? And that's as far as I got into it. So now I'm not your financial advisor. I'm just telling you what I'm doing, okay? You can do whatever you want, but here's what I'm doing. So at 33,000, I have a small DCA ready because that could be our bottom. But if we go lower, what happens after that is now we're in the summer lows from last bear area accumulation, okay? And this is between 33,500 to about 27,000, maybe a little above that. It's more like up here somewhere. Right in here, this whole area is a battle zone. There's a lot of price action in this area. It's going to be difficult to break through here to the downside, okay? Now, we're already below the bull market support band, which I think, I don't have it up here, but it's like 40,000 or something at this point. We're below that, okay? And so now we're looking for the next major area, and that would be the summer lows, which is 33 to about 28,000, okay? That's likely the bottom, is in this box somewhere. But if we break through that, and traditionally we have, when you fall below the 50-week, you might visit the 200-week average. And the 200-week average moves with the price of Bitcoin. But for the next few months, the 200-week is right around 24,000 or so. And as far as I can tell, we've never fallen below the 200-week before, okay? So now, at this point, at 24,000, all metrics and logic and whales and mathematics have already been thrown out the door. Now it's just primal fear, okay? If we get down to 24,000, it's just panic. There's no reason to be this low, okay? But let's say we get there. Then what happens? Do we go lower than that? Well, there's a few reasons why it would be extremely difficult to go below 24,000. That is, all of your whales would have to give up. Michael Saylor would have to cash out and leave, okay? Tesla would have to bail. Do Kwon from Terra, he's like, I'm done with technology, and he lives on a farm somewhere. That's what would happen to go below 24,000. Okay, highly unlikely. Some people are saying that we're going all the way to 20,000, which would be last cycle's high. That has never happened in the history of Bitcoin. We've never gone back to a previous cycle's high. So that's what makes Bitcoin so good, is that even when things are terrible, if you zoom out, you're still going up and to the right. So 20K has also never happened. So now we're down to two numbers that have never occurred before, okay? So what happens at 24? What would keep us above that? Well, some people are afraid that if the price gets too low, that Michael Saylor, effectively the Jesus Christ of Bitcoin, the biggest holder, that he would sell off because he has borrowed against his Bitcoin to buy more Bitcoin. And they go, hey man, you're going to get margin called in the low 20s, 26,000, 21,000, you're going to get liquidated. And Michael Saylor goes, all right, everybody, two things. First thing, I would just add more collateral. Like, I have a huge pile of Bitcoin to play with. I can just add more collateral. I can bring my margin call down to 5,000 as the Bitcoin price. That's not going to happen. And he goes, way before that happens, I'll just buy up a bunch of Bitcoin on spot exchanges like Kraken and Coinbase, which would elevate the price of Bitcoin. It would either strengthen it as support or give it a nice boost up into the next safe zone. Okay? So right now, to clarify, because billionaires buy lots of Bitcoin all the time and it doesn't affect the price. Why? Because they don't buy the Bitcoin in bulk off exchanges. Okay? They buy it OTC, meaning they buy it directly from someone else. They go, hey, Steve, you got 1 billion Bitcoin? I want to buy them all from you at 37,000 a piece, a set price. And they do it between each other, not on an exchange. So it doesn't change the total number of available Bitcoin on exchanges. What Michael Saylor would do differently this time to keep the price up, let's say if we're nearing 24,000, he would go, I'm just going to buy up 50,000 Bitcoin at this price on exchanges. And that would go, whoa, now there's far fewer Bitcoin available to the public and they're worth more because it's a smaller supply, theoretically. Okay? So what would keep this price going down? Like, why is this price bad? And why isn't this the capitulation? Why is this not the end of the downtrend, you could argue? Is that when you're looking for a capitulation candle, something that signifies the real wallop, the real end of the bear slide, is you look for massive sell pressure, right? Look at the past. Boom! We got smashed with that sell pressure, but then it stopped. Now we're in accumulation zone and we can come back. What's different this time is there is no blast of sell pressure. It's a slow bleed of lack of volume either way. It's a slow bleed off. What you need is that hard capitulation, which is painful but very short-lived. Okay? We haven't seen that yet. So you could argue that we have much further to go. Okay? And then macro level, and this is what really matters, is we have a hawkish Fed that's raising rates consistently now. Okay? We have Putin. Tomorrow is Victory Day in Russia, and we don't know what he's going to do. He might double down on Ukraine. He might declare victory. He might sign a peace treaty. He might send nukes our way. We don't know. And that is contributing to this horrible fear rating. This is extreme fear at 11. That's crazy. Okay? It's crazy fear. So a lot of it is historically high inflation. The DXY is out of control high right now, which always hurts the markets. We have unknowns with Russia. We have supply chain issues, worst ever. And so all these things add up to a risk-off environment. So risk-off, if you're new to this stuff, is there are two types of investments. Risk-on, which means money's good, let's have fun. Elon Musk, oh, you're inventing a space helicopter? Hell yeah, man, buy me one of those. I'm interested. That's risk on. That's what crypto and tech does really well in. It's innovation, new ideas, party time. Let's come up with something new and awesome. Risk on is that stuff. Risk off is, I'm just trying to eat right now. I'm just trying to put some gas in my car. I have no time for space helicopters. I don't care about your blockchain bullshit. I'm just trying to survive. I care more about toilet paper than Teslas. That's risk off. And right now we are in a risk off market because of all of these macro fears, okay? Now, the only way this stuff turns around is when inflation gets under control. When inflation gets under control, or there's a recession to force it under control, then the Federal Reserve can back off. And when the Fed backs off, then the DXY starts to cool off. And then the markets come back in a true, healthy, sustainable way, okay? But right now, the DXY the Dixie is a hard dick right now, and it's not slowing down. And when the DXY is high, the markets suffer, okay? Especially risk-on stuff like cryptocurrency and tech. Really everything's down, but especially innovative stuff like technology and cryptocurrency. okay? So we ultimately have to see what happens over the next few months. And we do have some indicators coming up right around the bend. One of them is a CPI data report coming out on Wednesday, which is the 11th. Now that will give us data on April's inflation numbers, which are going to be lousy. Okay, that's probably not going to be good. But the one after that has been clearly affected by this 0.5 percentage point rate hike. And that should bring inflation numbers under control a little bit. And I think that might be a green light for some improvement, maybe a breath of fresh air, maybe a little bit of a bounce back. A bull run, a reversal, out of the question. We have way too many big problems that are going to take at least 6 months to a year to smooth over, okay? Now, none of this matters if we get a new black swan event, which could be nuclear war with Russia. That's always a possibility. But if that's out of the way, we have possibilities for bounce backs. And these, with the good news, are things like, hey, if the war with Russia and Ukraine is over, that's going to bring some big relief to the markets globally. Everybody's going to go, yay, we can buy stuff again. We can invest in something. We're not going to die. And right off the bat, that fear is going to blast all the way up to the middle somewhere. We still have, supply chain issues and inflation issues, but the war's over. So people can take a sigh, a breath of relief, right? So Victory Day tomorrow will give us a little bit of insight into what Putin's plans are for the near future with Ukraine. Hopefully he goes easy on us, considering he has cancer up his ass, and maybe that sombers you a little bit. Let's say you have cancer, you're like, maybe I'll go easy. I gotta take it easy. Doctor's orders, right? Hopefully that happens. Maybe he comes out tomorrow and he's got a cooler head. We'll see. Another good thing could happen is, the inflation data improves, or it stabilizes, starts coming back down. Then the Fed could ease off a little bit. The Dixie comes down. The market comes back up. Now, this transition will happen, but that takes a while. Okay, 3-6 months, a year even. It can take a while. So some people are saying that, we're not going to hit 24,000 right away. It could take 6 months, and in between we'll have maybe some positive moments. We're like, hey, we got some little, like all these little fake out rallies, but we slowly but surely bleed down to the 200 weekly, which by then would actually be a little bit higher. It'd be like maybe 25, 26. And that could happen too. So another thing I wanted to clarify is I looked at my dad's crypto portfolio, which, to be fair, he hasn't touched in a long time. And I saw what he had in there, and that was cryptos that you would have during a bull market, and that's not what we're in. So he had metaverse coins, like Decentraland and Engine and Loopring and stuff that's like very speculative. And when we're in a bear market, there's a few things you need to know. Cash is king, and altcoins are risky. Now, the only altcoin that's really not risky by comparison is Ethereum. Bitcoin and Ethereum are like the roots and the trunk of the tree. Okay, so Bitcoin is the roots, Ethereum is the trunk. And you have some layer ones that are like the strong branches, and then you have way on the end of the branch with the leaves is like Loopring and Engine, and what else did he have? Some ApeCoin, right? These are pretty leaves, little flowers, and they're enticing. But when a storm comes, what gets blown off the tree? The leaves and the flowers and the weak branches. So, although the trunk and the roots are boring, they tend to last through the storms. Now, a bear market will take out a lot of these cryptocurrencies, okay? So how many do we have now? Over 19,000 cryptos on the books. And really only 20 of them or less are worth considering. We have a lot of leaves on the tree, but only a few strong branches. So in a risk-off environment, you don't want any speculative weird stuff, okay? Even crypto as a whole is risky, but the least risky are Bitcoin and Ethereum, or things that you have staked long term that you're earning interest on, like Cava, for instance. I always love Cava. Cava has taken a big dump, but I don't really care because I'm making 23% interest. I plan on just letting that grow for a long time. I like Cava. They got a lot of stuff going on, but that's my unique perspective and opinion. I really like Cava in particular, but I know they're a skinny branch. And this shit could all come crashing down. But I'm willing to take that risk because I don't have everything in them, just like a little bit of money. So we're looking for risk-off investments, the safe plays, which is cash, and if you're sticking with crypto, Bitcoin or Ethereum. Anything else is kind of risky, okay? Now, should you sell off everything right now? If you're selling at a big loss, wait it out if you can. Wait it out for 6 months, a year. Chill, okay? You don't want to panic sell. That's very rarely a good idea, okay? But if you have any profit to take it where you can. You want a cash position so you're flexible, okay, to see what happens. If we do indeed go much lower, you want to be ready to enjoy buying those dips, right? But if you're all bought out, right around here somewhere, you're missing the party down here, okay? And we don't want that to happen to you. Now, we're seeing a little bit of comeback, but everybody's waiting to see what happens this week. We have Putin. Is he going to kill us? And then we have CPI data. How's that going to look? So we're in a holding pattern. But as you can see, overall, there's no conviction up or down. It's just a slow bleed of interest and volume. So let's look at where we are in the RSI. Wow, we're looking really oversold. Now, we could go lower, and if you were to match that with the chart, we're looking at what is this? 29, 30? I mean, 30 is right around here somewhere, okay? We could go lower, but there's been times in the past where we went low and came back up. But this is the weekly RSI, and we're getting pretty low. So we're nearing the bottom based purely on the RSI. So that hopefully clarifies things. My DCAs are at 33K, 30K. I think I have another one at 29 a little bit, and a little bit at 27, and that's as far as I've gone so far. Just little buys at those numbers. You can do what you want, but hopefully I painted a half-decent picture of the reasons why we're staying low. It's not because Bitcoin's lousy or unhealthy. The metrics are awesome. There's fewer and fewer Bitcoins available on exchanges. Everything adds up to Bitcoin being very valuable, but these macro fears are so heavy that nothing can succeed in this market, really. But in the stock market, I just want to call attention to this one more time. Amazon's 20-to-1 stock split is coming June 6th. So we could go lower, just like with everything else, right? DXY is too high, so Amazon is a tech stock, technically. They're going down with everybody else. It could go down lower, but a 20-to-1 stock split, I generally like to buy a stock right before they're split, because after splits, especially on something that's so coveted as Amazon stock, when this price is at $100-something bucks, you're going to get a lot of new buyers, okay? People are looking for an opportunity. So if you are sitting on one share of Amazon, it'll become 20 shares a month from now. And those 20 shares will increase in value. Historically, this should happen. Increase in value quite a bit fast. And the last time this happened was with Tesla that I remember, that I was at least a part of. Tesla was, $2,000 a piece. They did their 5-to-1 split. They were like $400. I bought some. It jumped up to $650, $700 real fast. And I sold them all for some profit. Now, had I held on, I could have enjoyed, $1,200 a share. But Tesla's thinking about doing another split this year. And so I'll be around for that. But in the near future, if we're talking about risk off, what's the safer play in the short term? You're scared of crypto right now. You're scared of everything. Where do I put my money? You could buy a share of Amazon and just wait for that split next month and enjoy a nice little return. But that's all I have for you today. Keep a cool head, people. Don't panic like an idiot. Hopefully, You've cleaned up your portfolio a little bit. If not, that's okay. There's always another train. If you got to earn more money, do it. But you never want to invest your rent money, okay? Make sure your bills are covered and that you're not watching this because if this doesn't go well, you don't eat. We don't want to be in that position, okay? And if you are in that position, this is going to be a hard lesson for you to learn, but it's never going to happen to you again, okay? This next bull run, you're going to kick twice as much ass. You're going to do great, and I'm going to be with you this whole time.